dishonest banking creates credit bubbles because the fake dollars that are generated are confused for real loanable funds. People think, oh, this is real profit, but it's just inflation. It's just dollars being printed that are not backed by anything and cannot be redeemed for gold at the end of the day.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 3rd through November 10th, 2025, while supplies last. First this week, 10-ounce silver Buffalo bars are just $3.49 over spot per ounce. Next, 2025 2-ounce silver Canadian Rockies coins are $4.49 over spot per ounce. 1-ounce gold Rand refinery bars are just $135 over spot. Finally, pre-33 XF $5 gold Liberty are only $45 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. I'm delighted to reintroduce this returning guest who's been quite popular with our audience for his common sense, common man approach to explaining what can be complex concepts in a rather attractive and understanding way with lots of metaphors. Phil Lowe is the founder of the Bitter Draught on Rumble. He joins us today, Thursday, November 6, 2025. Phil, thanks for coming back on Liberty and Finance.
It's great to be back with you again, Donegan.
With your permission, we'd like to tackle 3 quick hit topics with you that I think will be of high interest to our viewers. And the first is a realistic assessment of endgame violence. You were referred to us by our mutual friend, Rafi Farber, the endgame investor. And we often talk about what a world would be like if we had $100 silver or $5,000 or $10,000 gold, and people say, be careful what you ask for, because it would be likely a world that would be very challenging in many ways, not as civilized as perhaps the one that we've come from. So we're going to talk to you about that. We'd also like to talk to you about your report on what has been referred to as the gentleman's portfolio of 1/3 gold, 1/3 land, and 1/3 investments. So there's been lots of new model portfolios suddenly sprouting out of the woodwork, from officialdom, from the highest levels of chief investment officers of different banks and so on. It's been interesting to hear that suddenly, when gold is breaking out to new nominal highs and silver had surpassed its previous nominal high, suddenly it's a good idea when it was considered almost an anathema until now. And thirdly, how a viewer can spot economic bubbles. We've been told that we're in the bubble of everything: stocks, bonds, and real estate. It'll be interesting to hear what your thoughts are of how people can spot economic bubbles. What are the signs and signals? It reminds me of when we've been telling people to watch out for certain predatory practices by certain dealers that specialize in precious metals and tend to beat the drum really hard on certain taglines or approaches. And they say, well, just tell us the names. And we go, no, we're going to teach you to fish, not just tell you there was a fish over there and there's a fish over there. That we try to make it much more educational and beneficial for the viewer. So if you can circle us back to what you believe to be a realistic assessment of endgame violence.
Sure. So I want to temper expectations about what the expectations of violence run the gamut from almost nothing to, the end of the world itself as we know it. So let's
Mad Max is about somewhere in the middle there.
Yes, Mad Max, the techno dystopia, all these things. So I'm a fairly Pollyannish, optimistic kind of guy, so I had hoped that we might even avoid in-game violence entirely, and this might be some sort of smooth transition, relatively. I mean, obviously, there's not going to be no disruptions at all, but a relatively smooth transition into a gold standard. However, recent violence has disabused me of that, and there's both the random violence and the political violence. And the random violence was that poor girl who got stabbed in the subway, and the political violence that recently occurred was Charlie Kirk's assassination. And one thing of note, both of those were recorded in 4K high def. So in the olden days, when you saw, when President Garfield was assassinated, you read in the newspaper, President Garfield was assassinated, and you go, oh, geez, that's terrible, and you fold up the newspaper and go about your day. Even when the Kennedy was assassinated, we have one film of the grainy Zapruder tape, and it's, shaking like this, and there's some fuzzy images, and you kind of see Kennedy's head jerk back, and that's about it. But now we have 4K high def. I mean, you can see it all, and it's really horrible. And we're probably going to see a good bit more of that. Unfortunately, it's just the nature of the society we have now, where the information is available and it's going to be produced. So the question is, how much violence should we expect? And so let's use the Weimar Republic as a guide. Is roughly what happens during the hyperinflation. So between Weimar Germany was a nation of 60 million people, I think 61 million people. So between 1918 and 1928, there were 376 political assassinations. Of those, Dunnigan, how many were between 1922 and 1923?
I will guess half, just to be aggressive.
350.
Out of?
376. So, and that was the peak of the inflationary collapse. That's when there were wheelbarrows full of money, wheelbarrows full of fake money littering the streets, and people would steal the wheelbarrow and leave the bills. People wallpapering their houses, making dresses out of the bills, whatever, right? So that's when the currency was completely worthless, and these would be the equivalent. The people getting assassinated were the equivalent of like Jerome Powell, Scott Bessent, mayors, governors, those sorts of things. I don't believe any heads of state were assassinated during that time. Additionally, so in addition to those 350 political assassinations, and if you want to extrapolate that level of violence to a country our size, you should probably multiply it by 6 to get a very rough back of the envelope guesstimation. So we're talking about probably about 2,000 political assassinations if we follow the Weimar trajectory. In addition, about 400 people died in street violence. This is when the communists and the fascists were clashing in the in open streets in Berlin. And I make the point. I've made the point before. We've said you can buy during the hyperinflation in Weimar. You could buy a house for 100 ounces of silver. You could buy a house with 5 ounces of gold, about 100 ounces of silver. Would buy a nice house, riverfront property in Berlin. The problem was, if you peel back the layer, Ernst Röhm and his stormtroopers were having an open battle with the communists right outside your door. So you close the window curtain again. So there's a reason the prices were that low. And judging by what just happened in New York, we could see very similar things happening then. There's going to be a reason, the penthouse apartment with a view of Times Square or a view of Central Park is 100 ounces of silver, right? Not gold, silver. We're talking that low.
Yeah, I just saw a meme, the Florida Realtor of the Year award going to the individual who was just elected in New York. So go ahead.
Now, so in addition to there's 350 died from 376 died from political assassinations. About 400 people died in street violence, and this is the political street violence of two mobs getting together and there's dead in the street afterwards. About 20,000 people died from malnutrition related issues like tuberculosis and influenza. So this is the supply chain breakdown. This is the food being stuck in the fields, not getting into the cities, and the people going hungry. So about 20,000 people suffered from that. About 1,000 people outright starved to death, where they just could not get enough calories and their bodies shut down and they died. Additionally, shops and farms were often looted, and there's a book, When Money Dies, that goes into this in great detail. Shops would be looted by raiding parties. We're no stranger to that already. I mean, shops are already being looted all the time by flash mobs, and farms as well. Especially farms near the cities, people would make excursions out, and they in the book, When Money Dies, they went into detail about how they would they would take the stuff they wanted, and then they would inflict extreme violence upon the farm for no reason. Kill the pigs. They wouldn't kill the pigs. They wouldn't eat the pigs. They would just kill them and leave them there. Burn the crops, even if they weren't going to eat them. They saw the farmers. It was just mob violence. Mobs behave violently. They saw the farmers had things that they didn't have, and they reacted with madness and violence. So the good news was the situation stabilized 1930 onwards, when the money was restored. That pure chaos of just complete shutdown of the economy, nothing working, people dying in the streets. It only lasted for about 6 months between 1922 and 1923. And I want to point out this, once again, this was a country of 61 million people. So these numbers, while scary, and it's going to be even scarier in 4K high def, you're going to log into your, log onto your computer and go onto X, and you're just going to see, people being murdered to some level. I don't know. I don't know to which level. But these numbers, while scary, are not civilization destroying numbers. These people went through World War I. The World War, 20,000 dead is nothing in World War I. So these are not civilization destroying numbers. And I also want to stress this, none of this is predetermined. I'm not saying we are guaranteed going to go down the Weimar route. Weimar was a very unique case and a unique time in history. So Argentina just had a hyperinflation. They got Javier Milei out of it, who's probably the most libertarian president on the face of the planet right now, and is doing significant. Now, he's not, he hasn't restored the honest money. I'm not sure he understands, despite his, economic leanings, I'm not sure he understands that gold and silver are money itself. He hasn't expressed that yet. But we could go a much more positive route than something like Weimar, and we could end up with someone like Javier Milei running the country. So what are some things, because your channel is dedicated to what your viewers can do to self-actualize, take action, right? So I want to give the advice here. What are some things we can do to maximize our personal safety, as well as help out our communities move forward as best as possible? And the most important thing by far to do is to unleash the free market. If the market can clear, no one is going to starve to death or die of malnutrition. So if you can buy the assets, if you can avoid the Bolshevism, the most important thing to do is to avoid the Bolshevism. And if somewhere's turning Bolshevik, you probably need to leave. If you're on Staten Island, for example, you probably should think about leaving. Even if you're not in the main part of New York City, you're probably close enough. So if you get to where you can be, say it doesn't need to be a libertarian utopia. You don't have to be in the free state of New Hampshire. If it's free enough, the market will be allowed to clear. The people will sell their assets to get the money they need to buy food. The stackers will buy those assets, acquire, vast sums of assets, and they will, the market will clear and we will move forward. And the stackers watching these videos today will be the next round of capitalists. The longer, I should add this, a lot of the violence would be, but not all, would be driven by failure of the market to clear. So, a lot of this violence comes from, if you imagine you're somebody who didn't know about your channel, didn't prepare at all, just a normal working guy, and you're driving home and gas is now $50 a gallon, and you have to get in line at the gas station because you need fuel to go to work tomorrow. And you have to tell your wife and children there's no dinner tonight because you need $200 to have enough gas for work tomorrow, right? So you're already processing all this mental, pain that your family's about to go through, and some jerk cuts in front of you at the gas station. Now, on a normal day, you just roll down your window, you go, "Hey, there's a line, bud," and what a jerk, But when you're on this high stress situation already, you get out of your car, you start kicking his bumper and screaming at him. He gets out, he starts shoving each other, and one of you shoots the other, right? This is the kind of, simmering violence that occurs in a hyperinflationary environment because most people are not prepared, and they are, emotionally dealing with the stress of having their currency become, turned to dust in front of their eyes, right? So the longer it takes for the market to clear, the more attractive alternatives like communism and fascism are going to look to desperate people. So the most important thing to do by far is to get the silver, especially the silver and copper. The gold can vault, but the silver and copper must flow out and be traded amongst the people. It's the most important thing I will ever do in my life, I think, is to get the silver stacks out. So, like I said, you, dear viewer, you can assist the market in clearing by disgorging your silver, purchasing assets. Politics, in my view, is massively overrated in its ability to solve problems. It's not helping. I mean, you saw the wave of what was promised with this current administration. When they were running, we were going to open up Fort Knox. We were going to see what was inside. We were going to make the government more efficient. And lo and behold, what are we doing now? We're bombing other countries. None of the efficiency stuff has been, the promised efficiency stuff has happened. So I don't think politics is going to help very much at all. And so I don't think some of the viewers might be inspired, like, oh, I need to run for mayor, I need to run for alderman, I need to do something to lead my community. If you don't want to, and this is you remember 376 people were assassinated in this period. So if you don't want to, I don't think you need to. You don't have to heed the call to be a local leader unless this is something you want to do. So unless you are running for office or behaving imprudently, I mean, if you're running into a bar and you're like, drinks for everybody, I'm going to, and you start, in fact, I'm going to buy the whole bar, and you start slapping gold coins down on the table, yeah, you're probably going to attract some unwanted attention. So behave prudently and don't run for, if you're running for political office saying, I'm going to, throw out all the bums, the political risk might be higher than normal, or the political risk might be a little bit high. The personal risk, I should say. But if you don't behave imprudently and you're not running for public office and you're not making a big stink about things, the personal risk will be higher than it is right now, probably, but it's not going to be catastrophic. I mean, most people in Weimar Germany, they did okay. They in terms of violence, most people didn't walk around thinking they were going to be mobbed in the street immediately. It was political organizations that were fighting each other, right? So the crisis phase should only last about 3 to 6 months, maybe even less. We don't have the Weimar problem lasted so long because they had other countries were holding them hostage, basically saying you must pay us in gold, of gold they did not in fact have, right? So the U.S. can default on its debt. Then there's no one who's going to say, we're going to invade you if you don't pay us. Well, okay, we'll come invade us, right? It's come and take it. The U.S. will default on its debt. That will cause the crisis to spike. But once that spikes, people realize that they're not going to get the money they thought they were going to get. Everyone has a good cry. Everyone gets up the next day and gets back to work. The crisis phase, like I said, should only last 3 to 6 months, maybe even less. So even if you don't hunker down, I know some people are building shelters out in the middle of nowhere, prepping hard, thinking things are going to get very Mad Maxy. Even if you don't hunker down, the risks are not that elevated, as long as you remain prudent. Like I said, if you buy the Lamborghini, put it in your garage and close the door. You don't drive around town in the Lamborghini, right? So we all have to decide, in the more general sense, we all have to decide what is worth living for and what is worth dying for as well. So I would just, in the most general advice, I would say follow your conscience through the end game and after. And I do want to assure the viewer, if you follow the Austrian School of Economics at all, you believe in spontaneous order. And spontaneous order will emerge from the chaos. Now, we can't see the spontaneous order, right? I can't tell you what factories are going to exist after the crash. All I know is that people will need things and people will go to work to provide things that other people need. So we should see a return to order fairly quickly after the chaos.
I know that our viewers and subscribers tend to be later career stage and retirement age and very hardworking, salt of the earth. They've typically spent most of their adult lifetime trying to take good care of business, take care of their families, take care of their communities, take care of the next generation. So you're certainly speaking to some very responsible people who will behave responsibly going ahead as well. And our society will depend on that. So thank you for your view of that. I know everybody has a somewhat cloudy crystal ball or telescope looking into the future, but it's interesting to get your studied perspective on that. I know our time is going to be tight, so we're going to have to make each of these next sections less than 15 minutes. What about the gentleman's portfolio that you've read and written about, the traditional 1/3 gold, 1/3 land, 1/3 investments? This is one of several model portfolios that are sprouting up remarkably now, hearkening to time-proven traditions that were basically ignored or turned a blind eye for most of the last half century.
Yeah, how about that? Everyone's suddenly starting to look like the gentleman's portfolio once again. So the gentleman's portfolio is 1/3 gold and silver. It's liquid, but it owns, and this is I'm talking about physical possession or in a vault nearby. It's very liquid. You can literally go get your money and go spend it because it is money, but it earns no returns. That's the thing everyone's always complaining about. Gold has no dividends. That is true. Gold has no yields. So you keep 1/3 in that. You can have 1/3 in productive land. This is like owning a farmland, or even owning your, if you're running a bakery out of your house or something, which is what a lot of people did back in the old days. They would, pickle things in their house and then go sell the pickle jars. That counts as productive land. You are putting your land to productive use. So you can do things like that if you're particularly wealthy. And by the way, your viewers, this is not. I can't promise anything because this is just the way, I'm not allowed to promise anything. Advice would be illegal. But your viewers are probably going to be some of the wealthiest people on earth at the end of this if they followed your advice on the other side of the end game. And they're going to have a lot of wealth, particularly in the first form of gold and silver, and they're going to have to think about what they want to do with that. So one of the options is productive land. You can get productive land, farmland, shops buy commercial real estate, buy industrial real estate, and then you don't have to be you can just be the landlord. You don't have to be the capitalist, you don't have to be the entrepreneur. You can just be the capitalist. You could say, I have the land, you can work this land, and you can pay me rent for the use of this land, right? And then the final one is 1/3 stocks and bonds. This is investing in companies directly. Now, you do not have to. One thing people misunderstand in the inflationary period is that, we have to have a broad portfolio of this, that, and the other thing. We have to have 1,000 different companies, most of which we've never heard of, and we have no idea what they do, but number go up, so the 401k is a good idea, right? In the post-crash, you're probably going to be investing in local businesses, local stuff. And if you want to invest in things you are an expert in, you might invest in, for example, if you're an engineer, you might invest in engineering firms that you know about done it, right? It would be for the individual, investor to decide. It probably wouldn't be huge swaths of the population having large amounts of stocks. In fact, the whole gentleman's portfolio, the reason it's called the gentleman's portfolio is because it's for people of wealth. If you don't have wealth, you have no business being in the stock market at all. In fact, that's how JP Morgan knew the stock market was overflated, because he was getting a shoe shine, and the shoe shine boy said, hey, I'm in that stock market too. That's when JP Morgan went and sold all his shares immediately. The working man's portfolio is to have 8 children, take care of them all, and then save a bit of money for himself, and then have his children divvy up the responsibility of taking care of him in his old age. That's the traditional savings account. If you have a lot of wealth, then you can follow the gentleman's portfolio that I'm discussing now. So the traditional gentleman's portfolio had a good mix of liquid and illiquid assets, along with a pretty large safety net of just dead gold sitting in a vault. And so the inflationary system has tricked us into the 60-40 portfolio, which is 60% stocks, 40% bonds, and with other considerations like real estate sprinkled in. So compared to the gentleman's portfolio of 33, this would be something like 0, 20%, and then 80%, right? So they've got everybody massively on one side of the ship. So the question is, will we return to the traditional portfolio post-crash? Almost absolutely. I mean, if sound money created that outcome, once we return to sound money, we're probably going to end up right back at that outcome, where that is considered, a good mix of liquidity and risk. So if gold is money, why have a complex portfolio at all, right? Some of your viewers are going to wonder, I have maybe over the course of this, I've saved something like 100 ounces of gold, and I'm going to go through the crash with 100 ounces of gold. Why don't I just live on that after the crash, and I can just draw down that, and I don't have to worry about buying land and investing in businesses and things? First off, there's always the risk of theft or loss of gold, right? Be it vaulting. There's always the risk of something bad happen. If you're vaulting, the vaults might steal it. It might get confiscated government-wise. If you keep it at home, it might get stolen. A flood might sweep your house, and you never find your treasure again, right? So you just want to have diversity on just for its own sake, not to have all of your wealth in one specific spot, tucked away in your house somewhere. Secondly, money is used in transactions. That's the purpose. Gold is money and silver is money. And what do you use money for? You use it to trade with, right? So if everyone is just hiding gold pieces in their house, the market is going to drop prices until the gold is coaxed out of hiding. Now, the Keynesians make the mistake that this is somehow a bad thing, that the government needs to incentivize or force people to get the gold out of their house. That's not true at all. If people hoard gold, if everyone says everyone's scared and says, "Oh, I don't trust the market. I'm just gonna hoard my savings in my house, forever," the prices will drop and drop and drop and drop and drop until someone says, "Well, I just can't pass this offer up. I'm gonna go spend my gold now."
When you say the prices will drop, please clarify. You mean for other real things of value, like?
Yes. Yeah, not gold and silver. I apologize. Yes. Prices of all other goods in gold and silver terms will drop until until the gold gets coaxed out of its hiding places, right? This is what we saw this, every time you see an economic crash, this is what you see. The prices in the real terms collapse until the gold gets coaxed out of its hiding spots. Excuse me. So Additionally, returns on business ventures can exceed the wealth generated by one's own labor and stored as gold. So if I take my wealth that I earned through my day job and I just store it as gold, that's great. It's savings. A penny saved is a penny earned, as they say. If I apply it to business ventures, it can exceed the wealth that I would generate on my own. But there is there's a risk that the business venture fails and then I lose my investment, right? So that's why you have a mix of both. Now, of course, the modern inflationary system has convinced us that gold is not money and we don't need it as part of our portfolio, and that treasury bonds serve the purpose of gold now to basically protect your wealth in a bulletproof, a foolproof scheme, as it were. So for the reasons I listed above, a diversified portfolio is considered superior to just vaulting gold, because a man with 100 ounces of gold is so wealthy, but a man with 100 ounces of gold plus business ventures is considerably wealthier. Let's see, where was I? Oh, so we can edit this part out. I got stuck here. Okay, yes. So I would recommend right now and I'm not allowed to over recommend. So this is not advice, but I would consider thinking about I would consider thinking about overstacking now. So not just having you could probably do just fine with the gentleman's portfolio right now, but if you overstack now, so get more gold and silver now, and then balancing it out to the gentleman's portfolio during the crash, you'll probably outperform. In fact, if you were to overstack now and then during the crash disgorge almost everything, and then let the assets generate revenue back into pulling you back into the gentleman's portfolio, you'll probably do even better still. Just bearing in mind that there are risks associated with that. So nothing in life is risk-free. So of course, each user, I have no particular, I have no idea which stocks or which land is going to be the most beneficial. All I know is that, at the moment of the panic, it will be the best time you'll ever see in your human life to disgorge your gold and silver and exchange it for real assets. And I will say, in the future, if you ever feel like things are too jubilant, like people are getting too excited, like a bubble has formed, which is going to be our next topic real quick, you can always retreat back to precious metals because they'll always be there for you.
That's exactly where we're going next. Is you talked about these extremes, and Andy Schectman, the CEO of Miles Franklin, whom we interview every week for a weekly market update, has talked to us about that in his 40 years of being involved in investing, that it has, in his view, always been price anomalies that have provided the greatest opportunity in his view. And even others whom we've interviewed have talked about saying, keep it simple, buy what's cheap and sell what's expensive. Bob Moriarty says that, and Andy has said it's been in his career that when he has recognized these extremes of anomalies, whether it's the gold-silver ratio or the bullion to numismatics ratio or different types of things being out of whack. Just a few years ago, people noticed the price of crude oil going negative on the exchange temporarily. Those kinds of extremes where it seems like, well, I don't know, this really seems like an opportunity. Why is the market doing this? And Rick Rule has talked about being a contrarian. So taking movement at those extremes. You've cautioned us just now that bubbles both before and during the end game can be an opportunity. What kind of signs and signals do you watch for, and that people can use to spot economic bubbles?
Sure. The most important thing is how to spot a bubble if you're in one, because it's a lot easier to see a bubble if you are not in one. Everyone who watched Bernie Madoff, when the Bernie Madoff scandal broke, everyone who was not in that scandal said, what a bunch of idiots. Who would put their money with a guy promising, 13% returns year after year with no risk? I mean, clearly that was a Ponzi scheme, But when you're in one, when Bernie Madoff is sweet talking, you go to check on your money, and he's got all the charts right there in front of you, and all his office workers are busy little bees typing away, and he's got the keys to the city, and he's got the he's got the certificate of approval from the stock market. It looks real. Bubbles look real. That's why they happen. If they didn't look real, people wouldn't fall for them. So especially if you are in one, I'm going to give some tips to think about how you can tell if you are in a bubble. I I was in the bubble. I had a 401k. I had, I owned some cryptocurrency. I wasn't thinking about this stuff until after the mysterious virus of unknown origin hit our shores. And that changed my way of thinking. And I realized I am in a giant bubble. And I sort of like if you're holding a grenade, you kind of put it down and slowly back away. I pretty much did that and extracted myself from the bubble. And now I'm just here to help everybody else see, oh, we are probably in some sort of giant bubble. And you should think about, here are some signs that you can see. So bubbles are created by banking. Dishonest banking. Let me be very clear. Honest banking would not create a credit bubble. Dishonest banking creates credit bubbles because the fake dollars that are generated are confused for real loanable funds. People think, oh, this is real profit, but it's just inflation. It's just dollars being printed that are not backed by anything and cannot be redeemed for gold at the end of the day. So fake businesses' success attracts real money from people seeking yields. What does that mean? I want you to imagine, Dunnigan, imagine you're a plumber and you're working hard for your daily bread and you are in some lady's house and her kitchen sink is leaking and it's clogged and you are underneath the kitchen sink and you are, the border of the kitchen sink is jamming into your back and it's dark and it smells like mold and you're getting, who knows what dripped on you and you're making some money. But then your friend comes to you and he goes, oh, by the way, Dunnigan, I put up these AI-generated videos of people farting on YouTube, and I made $200,000 in a week. What's that guy under the sink going to say? He's going to say, what the hell am I doing here, right? Why am I under this sink, digging away muck from some old lady's sink when I could be making AI-generated fart videos on YouTube? Easy peasy, people click and I get the money, right? So he stops his job as a plumber and he runs off to go join the circus, right? He runs off to go join this AI bubble, or this bubble of AI-generated content. So those who invested, but eventually these yields prove false, right? That eventually everyone's like, okay, no one's really, it's probably bots watching the AI videos that are being generated by other bots, right? Eventually those yields prove false and a bust follows. So those who invested look quite foolish in retrospect, but bubbles do look sound in the moment. Everyone's really excited about AI. And you watch an AI video, you go, okay, that's kind of cool. That does indeed look like Barack Obama, and he's saying something stupid. Or that does indeed look like Donald Trump and he's saying something stupid, right? But how can you tell if the growth is real or not? How can the plumber under the sink say, you know what, I should probably continue my day job. This other thing that my friend has just got introduced me to is probably not real. I think his gains are not real and he's going to find out this is not true, right? So real growth, it's hard. It can be hard to tell in the moment, but real growth, mankind, we are constantly improving the world due to the invisible hand, right? Innovation automates distasteful jobs and simultaneously opens up more productive work for everybody, right? The pig farmer is the first person who says, you know what? I need a power hose, right? I'm tired of, sweeping the stuff with a broom, the pig waste, I'm tired of cleaning out this by hand. I need a power hose. Let me get a power hose and clean this pen with a power hose. That's an automation. That's an innovation, right? And if the power hose hadn't been invented yet, some entrepreneurial pig farmer would say, oh, you know what? Let's come up with this. Then I could sell it to the other pig farmers. That's what happens, right? Chamber pot maids and washerwomen were jobs. Those were careers that people had. You would go, before plumbing, people had to use the bathroom in the middle of the night, so they had a pot by their bed, and someone would come by in the morning and clean it out for money. Or if you were less wealthy, you did it yourself. But if you were of means, you paid someone to do it because it's disgusting. And washerwomen, people would come by and wash their clothes by hand. These jobs no longer exist. They're not career paths. But a YouTuber is now a career path. I am talking to you, and my friend Rafi and other people do this professionally. I'm just doing this as a side hustle. It's not not a full-time professional gig for me, but it is for other people, and they can make a living doing it. That is real growth. But there's also the inflationary side of like I said, these days you click on YouTube, half the stuff is AI generated videos of people farting, and you're like, are people really watching this? You have to wonder, is this real? Are people really being duped by this, or is this just a bubble on top of a bubble, right? So, like I said before, bubbles are solely formed by artificial credit expansion. With real money, these do not form because it is quickly discovered that whatever you were going to invest in is not producing outcomes. So you say, okay, well, this is not producing profit, so I'm cutting my losses and walking away from it. But when new credit is constantly pumped into it, it can look like real gains. So, and like I warn everybody, eventually, and it can take a very long time, the bubbles always pop. There is always a bust at the end of a boom. So here are some signs to tell if you were in a bubble or if the growth is real, because the two can intermingle and you don't know which is real and which is a bubble. The first sign is easy credit. Like I said before, if the credit has been easy for a while, and easy is a relative term, I understand that. If the credit has been easy for a while, you might be in a bubble. And I said, when I was first on my journey, I said, well, the Federal Reserve, they're not perfect, but they wouldn't give us easy credit. They wouldn't, do it on purpose to make things fall apart. And then I looked, and the Federal Reserve rate had been 0% for 14 years. Now, I want you to understand, Dunnigan, I have a master's degree in economics, and I was not paying attention. That is how people fall asleep. You just go about your day, you live your daily life, and you see the news reports, and you hear, oh, the Federal Reserve has engaged in quantitative easing, and you go, oh, well, gee, that doesn't sound, that sounds like something important is happening, but, you live your life, and nothing much is happening until you take the time to analyze it, and then you say, oh, my goodness gracious, this is not good. So 0% credit for 14 years is probably easy. I think that fits the definition of easy credit. We are probably in a gigantic bubble of I cannot quantify the proportions. Second is unsophisticated participants. Are people who have no business participating in a market engaged in it? And the answer is absolutely yes. There are people engaged in crypto. There are people engaged in AI stocks. And these are, normal day-to-day people. They're essentially just gambling because they're chasing, that their day job is not producing enough income for them to survive. So they're taking high-risk bets on the stock market. This is a very typical effect, a phenomenon of an inflationary system where everybody stops doing productive work and everybody becomes a stock jobber trying to get the next quick buck. Third, are natural laws being broken, right? When somebody says we've created a new paradigm where, we have anti-gravity boots. Oh, well, okay, I'd like to see those, right? Well, we're developing. They're still in developing, but trust me, those anti-gravity boots are coming out tomorrow, right? Or coming out next year once we get enough funding. Are some sort of natural laws getting broken? I have seen on crypto websites, I have seen declarations that Gresham's law, which is an economic law, it has been broken. We have cracked the code. We have broken Gresham's law, right? We have created new money, right? When people are saying that, they are in effect defying. They are claiming they have broken natural law, that they have defied natural law. They're probably wrong. That's the kindest way I can put it. If someone is saying that, they're probably wrong and they're probably shining you over. Again, this time is different, right? Oh, this is, now we have the real thing. Gold was money. That was analog money. This time is different. Now we have digital money. Now we have Bitcoin where you can store your wealth forever, right? And then finally, no actual profits. None of these companies are actually profitable. OpenAI is burning $12 billion a quarter right now, right? So every prompt you make into ChatGPT is costing Microsoft money. They're burning it, and they're burning it at a ferocious rate. And so, all these other companies are doing the same thing. Peloton has never been profitable. And yet people thought like, oh, it's the next big thing in biking. I can bike with an iPad in front of me instead of going out and with a real bike and enjoying nature. I can bike with a video of nature that I'm fake passing by, right? So this time, unlike the other previous times, this time the money itself has been in a tremendous bubble. And everything else that I've been referring to are bubbles on top of the monetary bubble itself. You can avoid, and it's going to pop. The monetary bubble is absolutely going to pop, and it's going to be absolutely nasty in an economic sense, hopefully not in the real world sense as I've discussed before. Probably some perturbations. Hopefully nothing that is too horrible. But you can avoid the bust by storing your capital in money itself. This is the third time I've brought this up. Gold and silver are actual, natural, from the grace of God to us, money. After the bust, you can apply your capital to sound businesses. And then bubbles, my final point is bubbles will be entirely avoided with sound banking. We don't have time to get into, I wanted to do a little diatribe on sound banking, but we are pressed for time. So I will just leave it on that statement. Bubbles could be avoided entirely if we had honest banking and no central banks.
Yeah, it's just as it's been said that if you want to know what the real impact of legislation coming out of Washington is, just look at the title of the bill and assume exactly the opposite is what's going to happen. It was actually the intent all along. Similarly, the stated intent of central banks, if you look at the actual impact on people's lives over time, you'll find that the impact is almost always just about the opposite of what they're claiming it to be, taking away our savings, our earnings and our retirements, and impoverishing us. And it's saying that, we're maintaining stable prices and stable inflation, stable in economic employment and so on. Phil, you write on these topics and many others on a recurring basis on your channel, The Bitter Draught. Tell people how they can find The Bitter Draught, where they should go to get more of your work on a more frequent basis than your returning visits here.
I make videos on Rumble and YouTube as well. I respond to the comments on YouTube as well. Let me rephrase that real quick. I try to respond to the comments on YouTube because I have noticed, even with the most innocuous statements, sometimes I get edited by the algorithm. I have no idea what I'm saying that is ticking the algorithm off.
Nope. And you never will.
But I'm to the point. I'm enraged to the point where I'm very minimal on what I try to say because it's just not worth it. I've tried to engage with your audience below these videos on your comment section, and I take the time to put in thoughtful comments, and YouTube deletes them, and the viewer never sees them. So I said, what is the point? So you can ideally reach me in the comment sections of Rumble. I will, if you put it on YouTube, I'll give it a try, I guess. And you can reach me at the bitterdraught@gmail.com, and you can reach me on X at the Bitter Draught.
Just to clarify for everyone, I know you've done this before, but for newbies, the Bitter Draught is spelled with the old-fashioned D-R-A-U-G-H-T spelling.
Yes.
So just remember that.
Yes, and I'm sure the link will be in the description of this video as well.
It will. Look in the description of this video. You'll see how to get a hold of Phil. And if you don't want to miss a single episode with Phil here on Liberty and Finance, you can get on our free mailing list by going to libertyandfinance.com, all spelled out, all one word, libertyandfinance.com. Put in your email address. Click submit. Make sure you confirm on the confirming email. You'll get one email in your inbox per day. We will not spam you, and it's completely private. We won't share your email address with anyone. You'll get every interview with Phil, with all of our other guests on a once-a-daily basis, and you'll see our weekly specials so you won't miss a thing. Phil, always grateful for your presence here. Take care.
Thank you, Dunnigan. Take care.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for November 3rd through November 10th, 2025, while supplies last. First this week, 10-ounce silver Buffalo bars are just $3.49 over spot per ounce. Next, 2025 2-ounce silver Canadian Rockies coins are $4.49 over spot per ounce. 1-ounce gold Rand refinery bars are just $135 over spot. Finally, pre-33 XF $5 gold Liberty are only $45 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.